Hey guys, it's Max. Happy Sunday. Thanks so much for tuning into the channel. This past Thursday and Friday, I was unable to go to an influencer event in New York, and I'm upset I couldn't go, and I'm sad. But unfortunately, there was also some news broken at this event about a new line of ETFs called LevMax, and it's from the brains of the people behind YieldMax. And I'm mainly thinking about Mike Venudo and Jay Pesterelli. Well, I'm trying to play catch up, but I've watched all the interviews with them from this weekend. There's a lot of good interviews, and I'd like to talk about this LevMax product because this thing looks really interesting to me. YieldMax enters the leverage ETF space. Now, I wrote an article about this on my Patreon, and I'll put a link to it, but let's just kind of review this. The brains behind YieldMax, Mike Venudo and Jay Pesterelli, who's actually the head trader of YieldMax. I'm going to say Jay's kind of the brains behind the option part of it, but I'm sure they both are. Love you, Mike. So they're on record talking about a new ETF. It's not only a new ETF, but a brand new line of ETFs called LevMax. Now, I've posted a link to an interview where Mike Venudo was talking about this, but there's also interviews out there with Jay talking about this. So I've done a bunch of research. I was up till 4 o'clock in the morning last night running backtests. Go figure, right? Story of my life. So the new YieldMax ETFs are a groundbreaking suite of funds designed to capture amplified returns in bullish markets. Each LevMax ETF aims to deliver approximately 3 times the positive monthly performance of the underlying security, offering a unique leverage exposure that many of us actively seek. While maximizing upside potential, it kind of maximizes upside potential. These funds are engineered to limit downside exposure to approximately 1x. And based on my backtesting, they do a very good job of that. So this innovative structure makes LevMax ETFs a compelling tool for experienced traders looking for some kind of tactical strategy. Speaking of innovative, there's already similar ETFs out there from another company called Innovator. However, there's some differences between Innovator. Innovator uses the yearly time frame, while LevMax uses the monthly time frame. But I looked at the positions on Innovator to kind of get a clue of what we might, Jay and them might be trying to do with LevMax. At the core of the LevMax strategy, it's a sophisticated option technique. These funds achieve the triple upside target by purchasing at the money or near the money call options while simultaneously offsetting some of those costs. And this is defined as the upside cap by selling higher strike or out of the money call options. This creates a defined outcome, and it offers predictability and potential gains. But traders have to understand that the upside cap in this LevMax strategy resets monthly. The Innovator, they reset yearly, but we're talking monthly right now. So for those accustomed to regular, investments, it's important to recognize that LevMax have characteristics unlike many investment products. I don't know of anything that gets 3x up and 1x down. There's a catch to the 3x up, and we're going to talk about it, but it's pretty impressive. So I strongly encourage everyone to go read the prospectus for yourself, but I read the prospectus last night. Here is what I took from it. So first of all, there's an ETF out there in the world. There's a whole line of them from Innovator, and they're called the Accelerator series. And I think that's a good name. They give you like an acceleration in the upside between certain points, kind of similar to what the lightning spread does. The lightning spread also gives you double exposure to the market between certain points. In any event, let's go. I want to show you guys option strat. And I put this trade into option strat last night. This is the strikes and everything for the Innovator trade. I just kind of want to show you the mechanics of it. Now, one thing, Innovator uses options with those funny strikes. I'm trying to think what they're called. Flex options, and those are options that only dealers can trade with each other. So, and I'm having to use regular people options up here to duplicate this. Well, with the flex option, they buy this option that's way, way, way in the money, beating the strike is 5 on something like the SPY that's trading at 600. So it's basically all at intrinsic premium. It is. It's 100% intrinsic premium, and it's for all intents and purposes identical to owning the stock. Option Strat doesn't have any 5 strike price because they don't have flex options. But so what I did is you can also do it with shares. You could construct this yourself. If you have 100 shares of SPY and you sell, the trick is you sell 2, or you buy 2 at the money options, and then you sell 3 out of the money options. You get a structure like this where you have 1x downside. Look at this. See up here where the bottom 5.4 where it says 5.5 right there, whatever. Look up and see on the top where it says 5.5. That means the market's down 5.5 and your return is down 5.5. But look at it on the upside. Now, the first thing to notice, look how the slope increases. Well, the slope is 3 times as steep. You get 3x the return. So should the market go up over the next year and you own this Innovator Accelerator Series, look at this. Market's up 4.4%. How much are you up? 13%, because you have triple upside. Here's the catch, though. You have triple upside with a cap. Once you get over this top strike, you're tapped out for the year. So if the market goes up 50% that year and you invested in this product, you made 13%. But they work as advertised. You did get triple upside to a point, and with single downside. So this is a compelling strategy, to say the least. Okay, let's get back in the middle of this Patreon and see what else we're talking about. So I just showed you the strikes of these flex options. See this. See, though, it's actually a 6 strike, but I mean, it's a 6 strike call. I mean, it costs $612,000. It's about the same cost just buying 100 shares. For all intents and purposes, it's like having 100 shares. And Jay even mentions that in his interview on this product. Okay, but in any event, the trick is how much size you allocate. So see, they have 190 of the stock, but then they have double, then they buy double the amount of at the money call options, which would be 380. And then they buy, and then they add, they don't double that number, but they do it in a ratio of 1 to 2 to 3, a 1 to 2 to 3 ratio. And then they add another part, let's just say, and on that other part is finally sold options. And that's the out of the money options. That's what gives you your upside cap. So Option Strat, like you just saw, does confirm the triple upside and single downside. I backtest this strategy in multiple time frames. It performs very well. I don't know the exact strikes they're using, so I hesitate to show you guys the exact backtest, but I put the cover of this is one of the backtest on it. And so you can see over the past 5 years, and just using my strikes that I came up with. They may not have the same strikes, but you can see here the 1 to 2 to 3 ratio. And you can see here it does a great job at protecting your capital. It does underperform. It does underperform slightly, but it does a great job of protecting capital. Here's the other big caveat. I'm testing SPY because I'm an index guy, and I have seen a prospectus running around where they're using indexes on this product. I've seen a screenshot of the prospectus. However, yesterday the prospectus I downloaded from the internet does not mention a SPY product, but these are the products it mentions. It mentions they're going to do these on individual stocks: Amazon, Bitcoin, Berkshire, Coinbase, Robinhood, Microsoft, MicroStrategies, Nvidia, Palantir, Reddit, SMCI, and Tesla. And I mean, it should be a lot of fun. I mean, there is no doubt it should be a lot of fun. And I cannot wait to get more information on this, because I do want to show you guys some back test and stuff. But I think at this point, it would be premature, to say the least. All right, guys. Well, what do you think about this product? I mean, it's definitely something brand new, and I'm looking at this as more of as a tactical thing than a set it and forget it. Kind of like you might buy TQQQ right now, and you get triple the daily upside, right? But we know that comes with a cost. There's always a cost that you pay in the market for anything, because there's no free money. But in that triple QQQ, I've seen people use it, and they might buy it for a month when they think we're going to have a rally. and they'll get tons of upside. But those products, TQQQ, are not meant to be left on, in my opinion. And I'd only like them for a week, 2 weeks, 3 weeks for a tactic. These I'm not sure. The jury's still out on. I think these might be a set it and forget it, but the jury's still out. As soon as I get more information, I'll give it to you guys, of course. All right, guys. I appreciate y'all. Have a good day. And oh my gosh, it's raining down here in Texas again. I mean, I haven't seen the sun in a week. They need to stop seeding the damn clouds down here. I mean, my gosh. Anyway, they have tons of first responders in that part of the world, and they've cleaned up a big part of the mess. And the good thing is, even if it floods again in those rivers, unfortunately, they're more prepared and they're pre-staffed with people there that, FEMA's there now finally, and everyone's there. So in any event, all right, guys, thank you so much. Have a happy Sunday. See you later.